Bill said, in order to produce consistent results that you can rely on, you're going to have to acquire an edge. I'm defining an edge as there is a higher probability of one thing happening over the other. And I said that I got a response saying, Akil, an edge is great, but what's more important is money management. And I said, what do you guys think of that? Tim says, I agree. Tobias says, what's the point? Me and Tobias are on the same page. Raymond says, I think both are important, but the edge is most important. Yeah. A good trader is a great risk manager. First and foremost, you can say that we're in the game of managing risk. We are. I mean, risk management is so crucial because it stops us from going broke, right? One of the main reasons traders fail is because they're not good risk managers. A lot of, I forgot when the survey was done, but understand, guys, the majority of traders win more than they lose. Or rather, they don't have a problem winning. The problem is when they lose, they blow their accounts, and there's all types of psychological issues there. So risk management is key. It's our job. However, it's a close second. It's a close second. And I'm in agreement with Tobias. Because you can be the greatest risk manager in the world. The world, Craig. The world. But if your system or strategy doesn't have an edge, will you make money? You will just be managing, you will just go broke slower. You will bleed even slower. That's what will happen. Right? Because you'll be managing your risk well, so you won't go broke right away. It will be a slow, torturous death. But because your system isn't actually producing profit, you'll never go in the right direction. So it's one of those trick questions where it's like the trader's right. Like risk management is so key. But technically, right? Technically, you do need an edge first. So I would put the edge in the hierarchy of things you need as a trader, right? I would put an edge right above risk management. And it's funny now. I feel like a hypocrite. That's what I get all the time. Where I'm like, I always preach. You guys know we always preach. Trading psychology is key, right? The most important thing in trading, you got to have trading psychology. And we always get the question where it's like, or the comment like, well, trading psychology, yeah, that's great and everything, but you need a strategy that works. And it's kind of like one of those things like, yeah, but if you have a strategy that works, but your trading psychology is whack, you're not going to make money. So you need to have trading psychology. But then you can look at it as what I just said. Well, if you have great trading psychology, but a system that doesn't work, then what's the point? And it's like, yeah, you're kind of right there. So you need, it all needs to work together, right? That's like having a brain and no heart, or a heart with no brain, right? It needs to all work together. So there's really no wrong answer. But yeah, an edge is important, slightly more important. But nobody's wrong. Nobody's wrong. Nobody's wrong. You need both. One does not work without the other. Because if you don't have good risk management, you'll blow your account before you get to extract your edge or exploit your edge in the market. Glenn said, I heard, don't be in the markets too much. Then I also heard, in order for your edge to play out, you need to be in the markets often. So which one is it? Ooh, good question. What do you guys think? Glenn says, I heard, don't be in the markets too much. But then I also heard, if for your edge to play out, you need to be in the markets often. So which one is it, guys? Do we need to be in the markets too much? Not too often? This is I call this the Goldilocks theory. The Goldilocks theory. You guys know Goldilocks, right? Goldilocks, 3 bears. In reality, those bears would have had at it when they got home. Goldilocks would have been dinner. Here's the thing, right? So you don't want to be in the markets too much. You don't want to be in the markets too little. You want to be in the markets just the right amount of time. That's the answer. Not too hot, not too cold, just right. Raymond says, or guess says, depends on what you love, time or trading. Raymond says, as soon as you have your edge, you want to follow as many trades in your plan to exploit that edge. Tim says, I agree with Raymond. Tobias says, there's no time money correlation. And that's an interesting one. That is something that because I had, and I should write this down because this is a good topic. When I first got into trading, so I was under the same impression where it I guess it ideally it makes sense. So who asked this? Glenn is right? So an edge is something. An edge is a fancy word for saying that you have the probabilities are in your favor. Does that make sense, guys? An edge is a fancy way of saying that the probabilities are in your favor. So it's again, the best example you can give is a casino, right? All of the games in the casino has the edge, right? Even my favorite game, craps, which I think has the second highest probability of a win rate, the casino still has the edge. There's more ways for the casino to win than it is for you to win. Poker is taken out of the equation because that's player versus player, right? So the casino has this edge, meaning that the probability is in its favor. So the job of a casino is to exploit that edge as much as possible. So exploiting that edge as much as possible means getting as many people in the door as they can and keep as many people playing as long as they can. Because the more people that come in and the longer they're playing, the more probabilities that are going to play out in their favor, right? That's why if you notice in the casino, right, what is not present in a casino? Same as a supermarket, right? Very similar concept. They do the exact same things. What is not present in a casino? What will you never see in a casino? Banned, forbidden. A clock. There's no clocks. They don't want you knowing how long you're in there. They don't want you remembering that, oh yeah, I had something I was supposed to do before I got hooked to this table trying to make my money back. No. There's no clocks in a casino. What else is there none of in a casino? Most casinos. Very rarely are there any windows, right? They want you forgetting about that outside world and that things exist out there. No clocks, no windows. You're locked in, right? Now, what is there in a casino? Bright colors, flashing lights, all these things that kind of stimulate our senses, right? Loud noises. Ding, 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 ding. We associate loud noises with what? What do you think as soon as you hear a ding, 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 ding? People winning, right? Oh, someone just won big, right? I can win big too. I tell you what, it wouldn't surprise me, and I don't know this, it wouldn't surprise me if they had planter people in there that won big just to make you think that I can do it too. I don't know that for a fact at all, but it wouldn't surprise me if there were like paid people in the casino that would, maybe on a what's it called, a rigged machine that won, right? Just to make it seem like, oh, I won. And you're like, oh man, this guy just sat down. I can win too. It wouldn't surprise me. Again, I don't know what's happening. Casino people, if you're listening, don't come after me. But it wouldn't surprise me. But they also do stuff like they pump fresh oxygen into the casino, right? You can get high off oxygen. They pump fresh air, fresh oxygen into the casino, right? It's all stuff to keep you in there. That way they can keep exploiting your edge. So ideally, trading is the same way. And I guess this is the big thing with algorithmic trading, right? These mechanical systems, right? These high frequency systems have a very slight edge, right? And this is the real scalping. What retail traders are doing, this is not scalping. So if anyone tells you they're a scalper, that's wrong. I guess they have a different definition. We're not scalping. Scalping is taking like at max like a pip out the market, right? They're taking quarter pips and tenths of pips out the market. But they're doing it at a very high frequency over and over and over and over and over again. And ideally, when you have something that can do that, you just let it run as much as possible, right? So ideally, the best way to trade, the most efficient way to trade would be to have a system that has an edge, automate that system so it can extract the edge continuously from the market and let it run as much as it can. And that way it's exploiting the edge without your time investment. Now, what gets traders into trouble is they think that they can just let it run. No, it takes you have to manage it. So instead of being kind of an employee, you're the employer, where you have to keep track of your employee, which is your automated system. You have to because market conditions change. You're going to be foolish if you think the same automatic system is going to work the same way for history, right? It's just not going to happen. Market conditions change. It's going to affect your system differently. So there is a management aspect of that. But ideally, that's what you want to do, right? Because if Tobias can only spend 10 hours a day in the market, but his automated system can spend 24 hours a day in the market, yeah, right? Exploit your edge. Now, you probably think because I said that, I'm leaning towards, yeah, spend all your time in the market. No, because it's different being a human being. It is quite different being a human being than being an automated system. Because we know that the market provides only a limited amount of opportunities. Would you guys agree trading is a lot more boring than what you originally thought? How many of you guys thought you'd get into trading and be like the casino and Wolf of Wall Street where there's balloons and there's midgets running around, or and you're executing trades all the time and cash machines are going off, right? And you're just like your fingers are numb from all the profit taken, right? You're taking all this profit and your fingers are numb. They're bleeding from all the money you're counting, right? I used to think it was that way as well. Yeah. And then you get into the reality of market and you're like, this is boring. Like, this is why those Wall Street guys are doing all these drugs. They're bored all the time, right? It's boring. But what happens is when it's boring, it opens up the door for what? What does boredom open up the door for? Good trading? Disciplined trading? No. Temptation. Making mistakes. We can make a lot of analogies with temptation, but we're not going to take it there. We're not going to take it there this morning. So, if Tobias spends 24 hours in the market, you would think that it gives him more opportunity to exploit his edge, but the reality is it doesn't. It actually gives him more opportunity to make mistakes. And the number one reason traders fail is because of the mistakes they make. So he's actually, that's why there's no time versus money correlation, because he's more likely to actually sabotage himself than he is to help himself. So, yeah, trade hunting, impulsive, greed, yeah. Fear, right? The last trade lost, now you got to make up for it. And it's all the normal psychological stuff that happens. So that's why more time in the market isn't necessarily a good thing. So the answer is you just want to spend the right amount of time in the market. And the question is, Akil, what's the right amount of time in the market? Well, that's going to be different per person. For me, the right amount of time in the market is spending 3 hours a day live trading or day trading. Ideally, the right amount of time in the market, and this is why I love swing trading even more, is taking the trades that you're supposed to trade. Because the cool thing about swing trading is it gets us closer to that automated system that that we talked about earlier, but it still allows us to have the discretion, right? I would never trade an automated system. Again, I have trust issues. But if I'm a swing trader where I can literally check the charts for 30 minutes in the beginning of the day, know all the opportunities that I need to get involved in, make sure I have time to check on them and manage them throughout the day, right? I can still spend enough time in the market, but I'm not spending more time in the market. I'm not actively watching the charts. That's going to lead to the mistakes. I can kind of get in and get out, right? I can do my analysis. Here's what I did before teaching the live room, right? I would do my analysis in the morning. I would write down detailed notes of what exactly was happening, what setups were on my radar, and what setups were kind of, I forgot what I called them. I had a special column where it's like, you need to watch these. And this was on a 4-hour chart, right? So I'd be done my analysis probably by 8 o'clock. I'd eat breakfast or do whatever I need to do. I'd come back, check them at 9. And then keep watching my notes. Okay, euro dollar, waiting for next candle close, right? I knew the next candle wasn't going to close until 1 o'clock, right? So I didn't have to be back in my charts until about 12:55. So I wasn't spending a massive amount of time in the market, but I also wasn't missing opportunities. I also wasn't sitting there staring at my charts for 3 hours, waiting for a candle to close, knowing I couldn't do anything before that, and putting myself in a position where I'm tempted to maybe break a rule. So does that make sense about the time versus money correlation? and what there's no right amount of time. But the right amount of time is based on your lifestyle, your strategy, your exposure to the market. I would also say this as well to kind of add to it, right? I got a question the other day from a prospective member. Hopefully he joins. Who was talking about, we were having some conversations about the coaching aspects of the site and the time differences. And I said, hey, we've got Jason Greystone, who's London based, right? I'm New York based. So we cover the two main times in the market. And one of his concerns was like, I think he's in the Tokyo time zone. So I'm not sure where he's actually at, but he's in that time zone. And one of his concerns was like, hey, like the New York room, I'm asleep when that happens, or London room this, like what if I can't catch him? And I was talking to him, I said, hey, my room's recorded every day. Jason Greystone does highlights for his rooms. The Q&As are recorded, accountability sessions are recorded. We have a group of Tokyo-based traders that are on the chat because I see them at like 10 o'clock at night before I'm ready to go to bed. So although you may not be able to catch them live, or it may be a little bit of a sacrifice to catch them live, you can always catch the recordings and whatnot. And he's like, well, what do you think about opening a Tokyo live room session? Right? And I said that's nothing that we intend on doing. There's not enough interest in it. But what's another reason? And I wouldn't be running it. Jason would be running it. We'd have to get someone else to run it. But yeah, there's honestly, aside from like news event stuff, there's really not too much happening during that session. So is it really more beneficial to spend more time in the market, especially during a session that isn't too active? Right? We know when the active sessions are, right? You can Google it and get a little map of the crossover. We know that the two biggest markets are going to be the London session and the New York session. And we know that what I trade right here, I start a little bit early, but is that crossover kind of second half UK, first half New York. We know that after the London close, which is what, like 12 o'clock New York time, I think, things slow down in the afternoon here. New York, I don't trade the afternoon session. Again, unless there's like an FOMC statement or something like that, there's not a great amount of movement between 1 and 5. Lunch hangover, perhaps. So we can tell, we can pinpoint. I purposely run this live room at this time. Jason Greystone purposely runs his live room at that time because we want to trade the opportune times in the market. Now, if I wasn't here in New York, I would trade the London session more. Maybe I would stretch my hours out. Maybe I would trade London, take a bigger lunch break, then come and trade a little bit of New York. Because I do know that if I had a preferred session, it would probably be that London Open. That's a very good session. That's kind of like the start of the day. You get some initial positions being placed at that start of the day. But you can pinpoint the ideal times to look at the market, and then you can plan out exactly how much time you want to spend in the market during quote unquote the best periods. And your backtesting will tell you that. I'm speaking like if you're a day trader. Your backtesting will tell you that. If you look at your backtesting stats and you're taking them the correct way and you're keeping track of what time your trades are forming, you can put together a little map and see where the dots line up at. Right? If the majority of those dots are between here and here, you know when your ideal time is to trade. So you can find that out and you know when your ideal time is not to trade. I had a strategy once. This was a kind of like a mechanical strategy, or like a system, like moving averages and all this other stuff, where I was so specific with my times that I had hours in between. I traded from 8 to 11, and then from like 11 to 1 there was no trading, and then it was like 1 to 3, and then 3 to I think rest of the night was no trading, because those were the times where the majority of my best trades happened during those time periods. So I only focused on the markets for those time periods. Yeah. So good question. Good discussion. Thank you. We needed that. Tobias says 6 hours of 6 hours a day of live rooms is enough. Yeah. That's one of the reasons we cut down on the trading edges, guys. You guys said we're giving you too much stuff. Your mouths were too full. Your stomachs were too full. Seriously, yeah. Remember, we used to have the trading edges every day. And I would complain about people not watching them. And when I had a talk, and you guys were like, look, honestly, Akil, like, we love it. And our job is always to over provide. Like that's what we want to do. I want you guys to say like, man, look, I got too much information, because I'd rather over provide than under provide. I think we'd all agree with that, right? But you guys, you guys are like, you know what, it's just a little bit too much, right? Because I got 6 hours of live room. Now I got daily trading edges, and I'm trying to do the course material as well. And I got these Q&As I got to catch up on and accountability sessions. So that's why we backed off a little bit, because of you guys just said you were getting overwhelmed, which is not a negative, but that's why we love your feedback. So good stuff. All right, let's get back into this Euro Canada trade, because it's moving. Let's go down to the lower time frame, see if we can. Even a range bar chart. See if we can set you guys up in a position where you can make some money.